Good morning traders and welcome to the 7th of November morning update. My name is Mark Owen and I'm going to run through the charts with you and any major news announcements. Now, it has been an interesting open to say the least to this week's markets. Why do I say that? Well, there's no actual major news today, but we are 36 hours away from the US presidential election. Now, what did happen last night, or I should say yesterday afternoon, was the FBI absolves Clinton again 2 days ahead of the US election. So how have the markets interpreted this information? Well, a couple of things. One, you look at Donald Trump's argument saying it's impossible for them to scan and go through 650,000 emails in 8 days, and it does seem rather fast. However, we can't argue with what is being announced. Now, the markets have taken this as a positive outcome. Now, I'm actually going to change the format slightly in terms of the charts we're going to look at, and the reason I say that is we're going to start with the risk-off assets. So we're going to look at yen and gold, and what I want you to have a look at is how this market closed on Friday, which is here, and where it opened Sunday evening right the way up here. So it closed at roughly about 102.90, 102.85, and it opens above 104. So that's a big gap up on dollar yen. Now this is a reason why we never have any orders resting over the weekend, because we don't know what the news is going to be. We don't know how it's going to impact the market, and especially during low liquidity times like this, when people are actually sitting on the sidelines or reducing exposure until the outcome of the result. You see gaps like this. Now, sometimes it can work in your favor and other times it will work against you. The last thing is we want it to work against you, because remember, the first thing we always have to think about is capital preservation. So what we can see is huge gap up here, but what else do we notice? We also notice that the market has respected our buy zone and sell zone that we've highlighted. Those people that are watching, actually, we had quite a big take-up on people taking advantage of my offer of 1 week's free professional analysis. What I will say is on the analysis, we pretty much nailed it. We had a fantastic week last week with the analysis. Now, there are some tricky situations in terms of how do you manage a trade. Does the trade actually take the path that you expect it to take? So these are things that we cover in one-to-one sessions and through our programs. But I'm sure those that actually took advantage of the analysis will appreciate how good it was. The one bit of feedback I have had from other than good feedback was that because you didn't really understand how to take advantage of it, and you didn't really understand entry techniques and management techniques, some of you were a little bit frightened to pull the trigger based on the analysis alone. So those that were a little bit frightened to pull the trigger when they saw the analysis, I commend you for that, if that's been disciplined. But what it should also show you is the level of in-depth analysis we do based on the fundamentals and the technicals, and overlay it and why we believe that market's going to move in a certain manner. So if it's something you want to subscribe to, guys, it's called the Investor Insight Pack. Give me a shout on mark@phoenixblue.co.uk. Okay, so that's the dollar yen we've just looked at here. Now, if Clinton gets in, we're going to see a push through here, and we're going to expect 106 as his next level. If Trump gets in, we're probably going to see a bit of a decline in the US dollar and a sell-off in stocks and a rally in gold. But the reason I'm saying that is not just off beliefs, but it's what we're seeing in the market. As we see Donald Trump take the lead, you see a little bit of a sell-off in certain markets and a rush to the safe havens, and then obviously the news last night about Clinton, and you see that money move from the safe havens back into certain areas. So this is something we need to watch. So gold is the next one. So our analysis over the last couple of weeks was we went long gold around 1252, which was a break of this little movement here and a retest, and then we traded that all the way up to 1300. So it was like a $50 profit off a $7 risk. So a really nice risk reward trade there. Now you can see it is coming back down. We did have a short position in this, but last night after the news, and it moved in our favor because of the news announcements and huge volatility spikes. We're not actually in this trade anymore. We did move our stops to break even. There was a little rush, a little 1 hour spike that came up and took our stop before moving back to the downside. But is it something I'm bothered about? Not really, because I want to be out of the market this week. I'm not prepared to risk my capital around trading events like this where anything can happen. So, and I hope some of you out there, if not most of you, will take a similar stance on what we're saying. You know, the money's hard to be earned, and there's no point giving it away through one rash trade. Where do you put your stops anyway? Yeah, above structure, below structure makes sense, but you're going to get huge volatility spikes that are probably going to test those structure levels. So how far above or how far below do you put your stops? Yeah, it's not normal times. Oh, sorry, we're going to skip the Nikkei today. I just want to look at the dollar index because this is where most of our focus is. So the dollar index, what we'll see is the market came right up into the high 98s, 99s. We can see the consolidation. We can see the false breakout attempts. Not once did we can see the market push up here, but not once did it close above this point. And this was a clue to us that the market was going to basically slide back down towards the 97.20s. And if it broke through here, our next stop was the 96.20s. You can see how these zones have held up. Now there was potentially opportunity, but the way the markets have gapped and moved, there was no way really to get into this market. And like I said, it's not a market we really want to trade. Because it would be guesswork and just using the technicals and hoping that the news plays in our favor. So I will be sitting out of this market right now. So where do we expect it to go and what we're looking for next? Well, judging by the movement here, we would expect 98.50s to be tested again. But again, tomorrow, 36 hours from now, tomorrow evening, depending what the outcome is, we could see 96.20, maybe even 95s being tested. We could see this level being broken. We look to getting long. So a lot's going to come down to these results. So let's just sit on the sidelines, let the market tell us which way we're going to go, and then we will trade with the market direction and with the sentiment. So look at the euro dollar again. You see areas where we were looking at potential shorting here, and then eventually our third zone it came into, and it did respect beautifully. The first two never really gave us an opportunity. You could look at these end of day candles here, but there was no break of the lows, and then it just kept going, and then it pretty much same said here, no break of the lows. It was very one directional, higher highs, higher lows on each individual candle until today. So this shows a shift in sentiment, but we're 1.1060 or 50. It's a pretty significant level on a smaller time frame. You'll see it's the bottom of this range. So if we see a break below that and pull back, if you are wanting to trade, then that zone into there and back down to sort of 109.50s is a nice trade. Now that's it. We're keeping the news very short and we're keeping the charts very short and sweet this week. Purely because we don't want you to just get forced into taking trades. It's very easy to fall into that trap. What we do have is we've got two great events coming up this month. On the 15th of November in London. If you would like to attend this event, please email mark@phoenixblue.co.uk. I would say register online, but we have an issue with the website today, guys, so please apologize. We apologize for that. It will hopefully be back up and running in the next, well, I don't want to give a timeline, hopefully later on this afternoon. It's nothing major, but hopefully this afternoon we should be back live. And then our second event, which is going to be on the 21st of November in Oslo. Okay, so traders, oil traders from Stavanger, Bergen, Oslo, register. It'd be great to see you. If you've got any questions about what's the event consisting of and what you need to bring, well, first thing you need to do is contact us and see if there's a seat available, and then we'd love to have you there and we'd love to meet new people. We are a growing brand, and exciting times ahead. Alright, traders, that's it. We'll see you tomorrow, and I believe it's Tom Colley in the morning. So guys, have a great trading day and we'll see you then. Bye bye.